Good morning, it's Harvey Jackson. Just going to go through some of the news items, get through the trade position report that we put out, and just a couple other news items, and of course, look at the weather to see if we're going to have some good opportunities for harvest here. So the Notebook Crush report come out, and it looks like we actually are starting to edge up on the crush capacity utilization. We're sitting at 85.3% last week, and a year ago we were only at 83. So we're catching up here. 230,775 metric tons were crushed. And we still have this short position on, and basically saying, hey, we're still think that there's still some more downside to this market. So just how this short position is kind of set up, we went into a short at 660. We have some three-way options. Most of my clients have actually rolled them down to just puts, and then we're going to exit at 582. I see that's a bit of a change, so maybe I'll have to make sure all my clients have maybe a 582 rather than the 603. So I'll make that note. Spring wheat futures, we've been in this long position for quite a while. We have a negative position as we speak, thinking that we were going to actually maybe make a bottom there, but then we made lower low here. But we're definitely looking like we're trying to create a bottom here on the Minneapolis spring wheat, and it's a take profit up in that area. So just have a look at the Kansas wheat position. We've got multiple positions on. The last one we put on was on September 7th, and it's currently got a little bit of a positive trade, but it's and again, take the a little bit of length in here. Opposite is soybeans. We're expecting it to potentially push down, so we're entering a short position or selling, and we've got a 22-cent benefit there right now. On corn, we're in a short position as well, expecting it to pull down in the harvest pressure here. Just one of the stories, oil continues to be shaped by competing factors. Just there's still some tensions out there, but slowing economic growth is not helping. But a fairly constant supply, even though there is all kinds of sanctions put on Russia, there's still continues to be some product flowing there. Live cattle, the placements were not as expected, and the market actually it was trading up after the close there. I thought this story was interesting here too. Tariffs hit China tech trade in America, but the rest of the world keep on buying, and in some cases it's up to like 70%. So you can see there. Now, will it replace the U.S.? Probably not. But hey, tariffs are only hurting the one country, especially on the AI and all the other goods that we've that they're putting out of some of those manufacturing areas. So it looks like this is just McCreary weather, and you can see that we've got mostly sunny for the 10-day forecast. Decent temperatures as well. Just have a quick look here. This is an extended forecast, and again, I have a hard time with the 3-day forecast being 50% right, but I do like the setup. You can see that we're normal temperatures up here and below normal there, or below probability of the forecast here. Here's your active weather. It looks like there's maybe Alberta having some more small showers. Manitoba might have cleared our showers that we got over the weekend. We're hoping that's enough, but there is some fog in the area. Here we're looking at how the forecasts are rolling across. So actually, it's going to slow down some of that harvest that they've been moving into. Here's your just different weather models. This is GFS against the European model. There's still little bands of showers that are going to go across in the next 2 weeks. This is taking us all the way out to October 1st. Just a 7-day forecast looks open for most of Saskatchewan and Manitoba. Here's your relative humidity, and I'm looking at this as just a opportunity for harvest, because high relative humidity usually just doesn't have the combines running without a dryer. Just as I look at the markets here, canola is basically flat. It was down when I first started looking at it, but it's basically flat right now at the 618. Rapeseed is down $1.50 at 471. Soybean oil is down 0.22 of a penny at 50.40, and your crude oil is at 62.26. And your soybeans down $5.75, and spring wheat is basically unchanged and or down a penny, just like other wheats. So have a look at we're still in that downward trend channel. We're editing this down farther to 582 take profit. And again, just have to take note of that. Here is your November of 26 futures. I think anywhere in this range, if we move back up another, let's call it back into the 670 range, you should be a seller. Your European rapeseed, we're starting to almost get back to prices that it was back in early or late August, and up against the 200-day moving average. So this is the relative price to the European rapeseed in Canadian dollars. We're $148 as we stand right at the moment. Soybean oil needs to hold support here at the right where we are, and the 200-day moving average. And if it breaks below there, we're probably going all the way down to, let's call it 47 cents a pound. And this is the chart on the soybean futures, and it's already breaking below its previous low that it made in earlier on in this month. Soybean meal futures, same thing. Looks like it's going to possibly try to break below there. Canadian dollar, basically chopping around right around these medium-term moving averages, really going sideways for the last short while. It continues to consolidate, going sideways here. Have a look at wheat. This is your Minneapolis wheat. It's basically been chopping around, going sideways. Still looks like it's building a bottom here. We'll see after the close what kind of harvest progress there is in the U.S. We are moving along if we get good weather in Saskatchewan, Manitoba, and Alberta with our harvest progress. As this sun starts to shine here, it'd be nice. Here's your Kansas wheat, and here's a longer-term Kansas wheat, just to give you an idea. And this goes back multiple years, just this downward trend. To say that we're in a trend change, we have to get above that. So that's quite a ways higher. Chicago wheat, still not making new lows, but getting back to them to try to create a bottom. Corn futures, it's in this upward channel. We're coming up against some of those other areas where it needs to get a little bit higher. Have to get into that 432 kind of range. This is a potential sales target when you get towards that 200-day moving average and the top end of that trend or that channel. Live cattle, green, as I said from the start. The cattle on feed report placements were favorable for both the feeder cattle and the live cattle to trade higher, and hogs continue to try to make some highs here. I still believe that the other meat market might be picking up steam for some interest there. And that's all I have for you today.